We're going to talk about R&D research and development tax credits. So this is a very valuable relief which has been around for a number of years now. It does affect a lot more clients than you might think, and a few years ago it was very much encouraged to encourage blue sky thinking and innovation within industry. So there are two relief systems in place: the SME, small and medium-sized enterprises, and the large company relief. The SME relief was introduced some 20 years ago now, which makes me feel very old, remembering when it came in. And the large company relief was introduced a couple of years later. But it has certainly evolved over the years and to be much more generous and favourable. So there are three fundamental principles. You need to have a qualifying company. So this isn't available to sole traders, partnerships, or LLPs. It needs to be a qualifying activity, and the expenditure also needs to be qualifying. So I'll talk a little bit more about these in the next few slides. So what is R&D relief? There is a very specific definition in place. And so R&D for tax purposes takes place when a project seeks to achieve an advance in science or technology through the resolution of scientific or technological uncertainties. This includes creating new processes, products or services, making appreciable improvements to existing ones, and using science and technology to duplicate existing processes, products and services in a new way. Pure product development in itself does not qualify. So what does this mean? So it needs to be an advance. It needs to be something that's different. It can be wide-ranging. It has to be challenged, and it has to have some uncertainty. For example, can we make a drill that goes round corners? What's stopping us from doing that? Just because we might not succeed, it doesn't mean that we wouldn't then be able to claim R&D. We need to show that we've tried to overcome the uncertainty. But it does need to be something that can't easily be worked out, not just something that someone can Google. And I'm sure you've heard this description before, but it doesn't just have to be people in white coats in a laboratory. As I say, it can be quite wide-ranging. And it can apply to any sector. We have people who've made R&D claims in engineering, manufacturing, and software development and integration. So what costs will qualify for R&D? So as we said, they have to be qualifying costs and within the defined categories. And so we have staff costs. So within staff costs, this can be the gross salary, employer's national insurance contribution, and the employer's pension contribution. Now, with staff costs, in the current climate, it is worth noting that if someone is on furlough, then you wouldn't be able to claim their salary for R&D because, of course, they're not working to do R&D. If they are on sick leave or if they're on holiday, of course, you can claim it, but just worth noting that there is some specific guidance that says that if people are on furlough, you can't claim the staff cost for that period of time. And when we're looking at staff costs, we do need to bear in mind that it's highly unlikely that someone is working 100% of their time on R&D, unless you're trying to develop a coronavirus vaccine, of course. But in the manufacturing industry, we have clients where the staff might be doing research and development for, say, 50% of the time. So you wouldn't be expected to claim any more than 50% of the salary. And you do need to keep some documentation so that you know what staff members are doing, what percentage of time on R&D. Of course, with the R&D claim, it does become less advantageous when you've got directors doing R&D if they are on the lower salary range for tax planning purposes. And so it is salary costs. We're not looking at any dividends or anything like that. It would be actual remuneration that has gone through the RTI system. So subcontract costs also qualify, and that would be if you subcontract the work to somebody else, or if you have some subcontractors come in and do that work. Now, the claim is restricted to 65% of cost, and the reason for this really is because HMRC know that there will have been some markup, not like with staff costs. Those people would be looking to make a profit, so they've sort of made a guesstimate that they'd be looking to make 35% profit, so their claim is restricted to 65%. You can also claim against software directly used in R&D, and also some consumable items such as materials, light, heat, and power. Okay, so the research and development tax relief itself. So the SME relief is 230%. So for every £10,000 spent on R&D expenditure, you would get a tax deduction of £23,000. So, when you do the accounts, you obviously see that the £10,000 will go through the profit and loss account, and then you would see the uplift enhancement going through on the corporation tax return to give you that additional £13,000. So the tax relief is effectively given at a rate of 43.7%. So if you take your 19% and you multiply it by 230%, you get the 43.7%. And that's an interesting percentage to bear in mind if you're thinking about whether it's worth directors having higher salaries if they're working on research and development, because actually for the amount of additional tax that they would have to pay for salary, of course, the tax relief given is 43.7%. So if it's going up to higher rates, you'd be factoring in the higher rate tax and the national insurance elements. So it wouldn't be worth it. So for loss-making companies, the benefit is that they can, of course, surrender the loss for a refund of 14.5%. It is making that decision whether it's worth surrendering it now and having that money back, or whether you have a trading loss to carry forward where you could be getting relief at 19%, or, in the current situation, we expect corporation tax to be increasing as the government looks to reclaim some of the monies they've spent out under coronavirus. And so carrying forward that loss may well give you, relief at whatever corporation tax rate they then put corporation tax up to. So it's worth considering whether it's worth having the money now or having that loss available to carry forward. So the research and development tax relief for large company is above the line relief, so it works in a different way to the SME relief. So from the 1st of April 20, the R&D expenditure credit is worth up to 10.53% of qualifying R&D expenditure, and that was previously 9.72%. Loss-making companies can again surrender the excess credit for a refund. But do note that it is proposed that from the 1st of April 2021, the refund will be capped at 3 times the PAYE NIC payments made. So when you're making that sort of decision that we were just talking about, whether to surrender, to have a refund, or whether to carry it forward, it's just worth bearing in mind that change. SMEs will claim large company relief on some subsidised expenditure, such as grants and work subcontracted to them from a large company. So we talked about that subcontracting. So, you know, you could have a large company subcontracting to a smaller company. So it is just worth bearing in mind with the grants and subsidies, SME relief is a notifiable state aid. And if any funding is also a notifiable state aid, then there is no SME relief available for the whole project, although you can still claim the RDEC. You can't, and this is because you can't claim 2 state aids for the same project. If a grant or subsidy is not notifiable state aid, then SME relief is available on the unfunded element. And you can claim the RDEC on the funded part. There is some uncertainty about the coronavirus business interruption loan and whether or not that's going to affect it, and other COVID-19 funding. So those could have potential impacts on the R&D claims. We are awaiting clarification on that from HMRC. And so if we just look now at the SME scheme versus the large scheme. So for the SME scheme, there need to be less than 500 employees and either 200, and the turnover needs to be less than 100 million euros or the balance sheet total of less than 86 million euros. And this is looked at on a group basis and can also include companies where the interest is more than 25%. There are transitional rules for becoming a large company versus the SME, and take care in relation to corporate shareholders, including institutional investors, where the equity is greater than 25%. So now we're going to run through an example of a company with SME relief. So Alban Limited is an SME. It has taxable profits of 400,000 for the year ended 31st of March 2020. Included within this is £60,000 of qualifying research and development expenditure. So without claiming the relief, the corporation tax liability is 400,000 multiplied by the 19% corporation tax rate, which gives £76,000 of corporation tax due. If the R&D is claimed, then you would get an enhancement of £78,000. i.e. this would be the £60,000 multiplied by 130%. And of course, this is 130% because you would have already received 100% relief through the profit and loss account. Therefore, the corporation tax liability would be 322,000 multiplied by 19%, which is a corporation tax liability of £61,180. And so if we compare what we would have paid, 76,000, versus what we would pay if we had the R&D claim on there, 61,180, then we're looking at a saving of £14,820. This is actually quite important because a lot of the external R&D companies that provide the reports, you can go to them and get a report done for the R&D relief. They normally base their fees as a percentage of the saving, and some of the fees can actually be quite hefty, 20% and so on. And so that is worth considering that saving and some of those fees. So now we're going to do an example of an SME repayable tax credit. So Roundtree Limited is an SME. It has a tax loss of 200,000 for the year ended 31st of March 2020. Included within this is £60,000 of qualifying R&D expenditure. And so without claiming the relief, we would have losses of £200,000, which we could carry forward for a potential benefit, if the corporation tax rate stays the same, of £38,000. If the corporation tax rate goes up, it would be more than that. So if we claim the R&D enhancement, which we discussed in the last slide, which is 78,000, 130% of 60,000, the loss is then increased to £278,000. And so the question is, if we surrender the R&D element of the loss, which is 138,000, for a repayable tax credit, we would receive £20,010. We could then carry forward the loss element of £140,000, and we get potential future benefit of £26,600. If we carry forward the whole loss, then it would be £278,000. And if the corporation tax rate stays the same, the potential future benefit is £52,820. So what we have to balance is the being able to receive the cash now of £20,010 and carrying the rest forward. So, your relief is therefore going to be £46,610 versus the potential future benefit of £52,820, so £6,000 difference. And so how do we claim the R&D tax relief? So we have different clients. We have some clients that make quite big claims, and so they might use an external provider that will prepare the report for them. They then let us have that report, and we can then make sure the R&D is identified in the accounts. And when we complete the corporation tax return, we would then do the enhancement on the corporation tax return. That gets submitted and the refund comes through. For much smaller claims, clients can just write a description. There is some guidance about them being able to explain what they've done to provide an advancement in whatever field they're in. But the important thing is that that goes in with the corporation tax return. So if ever there's an inquiry or if ever someone wants to look at it, then it's already there, whether there's an external report or whether there's word in the white space that explains why that claim has been made. So there is a deadline for making the claim. It must be 2 years from the end of the accounting period. So it is something to think about quite early, especially if you're making quite a big claim, because there is quite a lot of detail that needs to be sought, to explain what you've done, why it qualifies, and it is good to get that process started early so that you're not missing out and missing that deadline. The SME claims tend to get processed within 30 days. The refunds are quite good at coming through. The RDEC claims do tend to take a little bit longer, and HMRC has 12 months to inquire into a claim once it's been submitted. There is a specialist department within HMRC that deals with the claims. Again, it is an area where they obviously would like to encourage it, which is why it's such a generous relief. But, again, it is worth making sure you've got the R&D report attached and the detail, so that if they want to look at it, they look at it there and then, it's fine, and you don't end up with an inquiry, particularly if it's a little while later. So the questions that you need to think about, where you might even not think that you could have an R&D claim, is: have you developed your own software? Have you developed any internal processes that reduce costs and improve production times? Do you carry out any design work that enhances technology? Are you in a business of manufacturing products? Are you using existing technologies in a unique way? Or are you combining two or more existing technologies in a way that have never been previously used? Or do you have any pending patents for products or services that could qualify? Of course, your accountant should also be, raising this, questioning it. It is again, very generous relief again, so they should always be saying, have you done any R&D development at all? So that concludes this part of the presentation about R&D, and I hope that was useful. And if you have any questions or queries, then please do contact myself or any of the other partners here at McGill's. Many thanks.